Okay, so first heading you can say costing can be, inverted commas, allocated according to jobs or batches. So far we've looked at absorption costing, and then we looked at marginal costing.
So costing can be allocated according
to jobs or batches. Okay, so how much does this job cost us? And you'll see what we mean. We don't mean job as in like a doctor or a lawyer or an accountant or a bookkeeper, whatever the case might be. Okay, the job is used as a specific task. Okay, so what job do you want me to do? What task do you want me to do? That's what we're looking at here. Okay, so let's define that just so we've got the right level of detail. You can just say a job is defined as a specific task requiring specific output, or input and output. You'll need both. Okay, jobs are specific.
So a job is defined
as a specific task that requires input to get output. Let's use that. Okay, so input will be required to produce output, but it's for a task. Okay, so what is your job? Okay, when we say job, we're referring to the task. So the job might be to put tires on the car. Okay, how much does that job cost us in terms of it being performed? Okay, that's what you're looking at.
That requires the input
to produce output, yeah, to get output. Okay.
Okay.
Second one, batch costing.
Yeah.
You can put a definition. So earlier you wrote costing can be defined as, okay, so you can say batch costing groups units into batches, okay, for lack of a better word, but that's exactly what it is. The word batch actually describes it, so just use the same word. It'll help you to remember it. Okay, so let's think about a batch. Okay, like sweets. Sweets are produced in batches, right? Okay, you have a packet of sweets. Right. Yes, you can buy sweets on their own, but generally they're batched. Okay, so if a sweet manufacturer had to produce sweets, they wouldn't be looking at how much does one sweet cost us. Okay, that would be very silly, because one sweet will probably cost like 2 cents or 3 cents for a big company. Okay, so analyzing per unit doesn't make sense. But now one packet of sweets, and let's say the sweet packet has 100 sweets, then that's better to manage in terms of decision making. Okay, that's exactly what you're looking at here. Okay, so you can just say larger volumes of goods or larger volumes of units. Large volumes of units can be grouped into batches to be analyzed. Okay, they talk about a cost accumulation system here. Yeah, large volume of units can be grouped into batches. Let's just add to that, according to a accumulation system, a cost accumulation system. Yeah, can be grouped into batches according to a cost accumulation system. Right, so how much does the batch cost us? Okay, last bullet, you can say underneath batch costing. Batch costing looks at job costing and process costing. It's a combination.
Looks at?
Yeah, you can say batch costing looks at a combination of costs.
Combination of
costs allocated to the batch. Okay, so I'm saying combination because it could be a lot of different costs. You could be looking at allocating it according to job costing or process costing. So those are the two they mentioned in the textbook. Maybe after that, costs according to the batch. Yeah, that's fine. And then you can just say asterisk, job costing / process costing.
Job costing?
Yeah, job costing / process costing. Okay, so process costing is the process. How long does the process take? How much does the process cost? Okay, and then right at the top here, they just go on and they say the final product costs consists of a combination of these process costs, a combination. The system is called batch or operating. It's the same thing. We've actually written what they've written here as well. Okay, last part of this chapter, calculating the value of inventory. That's a separate side note, still part of this section, this chapter, but just separate from what we've discussed so far. Calculating the value of inventory. They even say here, see chapter 20, which is the inventory chapter. Just to revise the concepts from that chapter, the lower of cost and net realizable value. That was something we spoke about then. Okay, so you got a heading, calculating value of inventory, asterisk, see chapter 20. Maybe second bullet, you can say principle of lower of cost and net realizable value. The lower of cost and net realizable value. Okay, so when we looked at inventory, we spoke about the lower of cost and net realizable value. Okay, net realizable value, just to revise, okay, because it's been a while since we looked at chapter 20. Net realizable value means how much can I get for that item. Okay, so if you're buying stationery, okay, if the stationery is brand new, then that stationery would have a cost price. Do you agree? Mm-hmm. Okay, if I've used the stationery as second-hand, okay, so net realizable value would be how much could I get from that particular item. Okay, net realizable. What happens if the stationery is damaged? Okay, if it's damaged, you're not going to get the cost, you're going to get less than that. Okay, net realizable value. Okay, that's that chapter done. Last chapter. And then your AS level accounting is complete. Happy, hey? Finally, it's been a while. Sure, we've looked at a lot of chapters. It's a long one, but you've gone quite well because you've got the right foundation, so that's good. That always helps. Okay. Alright, so chapter 31, last heading, business planning, and then we're done. When you see the word business planning, what comes to mind? And from an accounting point of view, from a cost point of view, what would you have to budget for? Okay, I gave the answer away. Okay, the answer is a budget. Okay, so watch. It's going to blow away the wind. Let's put something on top. Okay. All right. So chapter 31, business planning. First bullet: budgets are created. In brackets, you can say management accounting. Right. A budget will never ever be shown in this financial accounting. So in all these purple chapters, not once did I ever talk about a budget. Okay, because a budget isn't financial accounting. A budget is management accounting. A budget is actually financial management. Okay, the two disciplines, or areas overlap, but they're still separate. Okay, so budgets are created in brackets to say management accounting. Okay, so you can be asked to budget, but if you are asked to budget, it will be part of management accounting, not financial accounting. Okay, so can you define what a budget is? That you should know.
Yeah.
What does a budget do? Yes, and? Well, costs are expenses. Do we only look at the costs and expenses? Correct, we look at both. So let's write that down. Both income and expenses are budgeted for. And what does that mean? Two things. Okay, two topics that they've mentioned in the textbook. They talk about long-term planning and short-term planning. That relates to what we're discussing here. Okay, so budgets, yeah, budgets cover or show or...
You said both income?
Yeah, both income and expenses are planned for in a budget. Let's keep it simple. Okay, two things that the textbook talks about, long-term versus short-term, and that relates to this. Okay, so underneath that heading, or that little bullet, you can just put two side notes. Side note number 1, long-term planning looks at strategy. Yeah, so it's underneath this, it relates to what we talked about, income and expenses. Long-term planning refers to strategy. So what would we look at here? Well, strategy would involve assets, okay, capacity, liability. So those are the type of things that you would be planning for. Okay, are we going to buy a new building? Are we going to buy new equipment? Are we going to upgrade the equipment? Okay, what are we going to do? So let's put some examples there. You've got it. It relates to strategy in brackets, e.g. equipment, e.g. land and buildings. What else? Equipment, machinery, land, vehicles, furniture, equipment, all of that stuff. Okay. And then another bullet, short-term planning, refers to operations. And operations doesn't look at assets and liabilities. Okay, that's the long term. What do you think operations would be focusing on? Day-to-day running of the business, right? So what could be some of the day-to-day things? Give me some day-to-day things that a business would have to deal with. Short-term planning. Example, inventory. Okay, inventory. You could use cash flow. You could use salaries and wages, perhaps. Those type of things. Okay. Right. And let's just talk about benefits and limitations. Maybe with this one, maybe draw a table. Advantages on one side, disadvantages on the other side. And let's put a few here. Okay, this could be theory. I doubt they'll test too much of this, but you never know. The assignment might have it. The exams we have to check how much theory they test. Generally, from an accounting point of view, most universities or most colleges and that normally test application rather than theory. If they do test this, it will probably be very minor, 1 or 2 points. Right. So before we read the point that there is here in the textbook, can you think of reasons why we should budget? So what are some of the advantages and benefits?
The business won't fail and all that stuff.
Okay, good. So what would that represent? Planning for the future. Being prepared. They even use the word prepared. So you can just say planning and preparation.
The benefits?
Yes, let's summarize. Okay, you can obviously write a long paragraph if you need to. But the key that you should be describing, preparation and planning, okay, for the future.
Okay.
What else do you think? Other benefits? Motivation. Yes, if you have a budget, it can be a source or a way to motivate and influence different levels of the organization. Here they talk about staff being involved in preparing budgets. If the staff are aware of what the budget is, it can help motivate them. Okay, that's what they're looking at, motivation. Right, the last 2 points talk about a strategic plan. So another benefit would be strategy, strategic plan. And the other one, efficiency, good use of resources. Okay, so strategy and then efficiency. Okay, those are the bullets. Okay, obviously they're paragraphs, but that's what they're describing. Okay, disadvantages. Why don't you think it's not a good idea to budget? Possibly. Okay, so disappointment would be, okay, you can maybe group it under this one. They talked about a demotivator.
Okay, what's the first one so I can keep it in line with what they...
Budgets are only as good as the data being used, so inaccuracy. That's a limitation. Okay, so if you're budgeting, is the budget going to be 100% accurate? No, no one knows exactly what's going to happen in the future. Right, they also say budgets can become an overriding goal. This could lead to a misuse of resources or incorrect decisions being made. So you could say misuse of resources or incorrect decisions. Okay, that's a disadvantage. Okay, the demotivating one you wrote down already, so that's fine. Another one they spoke about here was budgets can lead to departmental rivalry. Okay, so you can just say internal competition for resources. Okay, because the budget. So which department gets how much? Okay, do we give more to the IT department and give less to the legal department? Okay, and they also talk about businesses that are smaller will have limited resources and budgets are prepared using various factors, taking factors into consideration. Okay, and then on this page they've just got a note about the control and the system, that's all. I think you could even add that. Can you not fit that in there at the bottom instead of starting a new page? It's so short. Okay, so just say budgetary control involves a system. Budgetary control involves a system in order to manage the records. Okay. Involves a system in order to manage the records. Okay, just in brackets you can say departmental budgets will create the company budget. Okay, so separate departments have a budget. If we put all the budgets together, we get the company budget. That's what they're looking at here.
Departments?
Yeah, so departmental budgets. So in other words, every department has a budget. Okay, departmental budgets create the company budgets. And that's that. Okay, just theory. There's not much accounting here. It's all theory, these last two chapters. Okay. The only thing that they had a calculation for here was the inventory, but that we looked at in chapter T. Okay. Alright, that's the end of the accounting.